What's up, swing trader? Snacks here. We're going to go through our watch list for September 16th, 2025, and a little less of a watch list, a little more market breadth, and planning for what we're going to do coming out of the Fed meeting on Wednesday. Okay, we're going to get a policy update. Looks like we're going to go into a rate cut cycle. So let's take a look at where we were last year. The last time we had a rate cut cycle was last year, September 17th, and October and November they did cut rates. Okay, so if we look on the charts here, we were testing all-time highs at all-time highs when they cut rates, and we pushed up just a bit, right, and trended a little bit. But anyways, we came back and retested prior all-time highs. That is why this line is in here. I didn't put that there today. Okay, this is the price action from last year that we were looking for a reaction at or around our level. Sometimes those are the moving averages, sometimes that is prior support resistance, okay, major levels, okay? So we got a retest of the level, reclaim of the 9, and we were taking trades through this, all right? So we're looking for the exact same thing here this year. We've got our prior all-time high level marked out, okay? And what we're looking for is, yeah, we're ripping, guys. We are very extended. Okay, so look, I'm expecting a pullback. I'm expecting a sell the news event. I don't know if we'll get it, okay? We could keep pushing higher, but we're gonna get a pullback at some point here. We are quite extended. Even off of the 9, we are extended at this point. Okay, so I am expecting a pullback, and I am not positioning too heavy really at all. I'm flat. I've got my longer term leaps, which account for 20% of my portfolio, and I never exceed 50 to 60% exposure. It's just the way that I do things. I use options for leverage. I'm up over 190% on the year. I'm still able to realize quite significant gains without ever really risking much more than half of my portfolio at any time. And of course, it's not really at half at risk, okay, because I'm only taking partials on that, right? So like, just because maybe I have a 10% position on doesn't mean I'm risking that full 10%. Of course I'm not. Anyways, guys, look, I'm flat, all right? I am light going into this purposefully that way, okay? We took some profits last week and got up over 190% on the year, and now we are waiting, okay, for a pullback off of this ripper that we're on, first of all, but you know, possibly a sell the news event. We're gonna look for where they step in. What level do they defend? Okay, do we get this gray area? Do we get the blue line, the 50 MA? Do we pull all the way back to prior all-time highs? You know, but wherever we see them step in, defend a level, and push us back above our short-term moving average, our entire focus list is going to be triggering triple R's. Most of it, you know, 85% plus of it is going to be giving beautiful triple R setups, and that is what we're going to play. Okay, we're going to make some money when we get that. So look, that's what I'm looking for. I see a bit of slight bearish divergence here that I want to point out. So as you notice here on the SPY, right, we're quite extended. Let me get this green line out of there. Quite extended, right? And we're even gapping up again here today at all-time highs, right? Pushing. And then if you look at RSP, the equal weighted, we're actually pulling back, okay? And we're testing that prior all-time high level where the green line should pop up any second here. There it is. All right, so slight negative or bearish divergence there. What we don't want to see when we're pushing to all-time highs and really extended is that it's only being led by a select few, by the heavily weighted within the S&P, right? The Mag 7. That's what this suggests, is that the Mag 7 is pushing higher, and the equally weighted, right, the rest of the names that make up the 500 are actually pulling back a little bit here. That's a bit of a negative divergence, bearish divergence, right? Caution flag. And we're seeing the same thing here in the Qs, right? Ripping, absolutely ripping, extended. And if you do the QQQE here, so the Qs equally weighted, you can see the same slight bit of negative divergence. Not so much that we had a couple down days the last 2 days, but just the fact that we are lagging, okay? Where the Qs are up here, equally weighted is lagging, all right? Bit of a bearish divergence there, all right? IWM is looking strong as well. We do expect the small caps to do well in a rate cut cycle. But guys, that's what I'm looking at, right? I see caution flags currently. Don't get FOMO, guys. We're gonna get some really attractive setups on the leaders, right? If we get a pullback, if we get a bit of a market correction coming out of this announcement that I think everyone is pretty exuberant about, people think that things are gonna just run to the moon. Well, dude, they have been for 6 months. So, I mean, that's just a fact. We've been absolutely ripping up, okay, for 6 months coming off of the tariff lows. So guys, a little bit of a sputter here would not surprise me at all, but we're going to leverage that into setting up our next push higher, okay? And if we need to pump the brakes for a few days or a few weeks even, then that's what we're gonna do, all right? Because we know that when they do step in and show us their positioning, if they do step in and show strength at one of our levels and get us back onto trend, we're gonna have a lot of setups, all right, that we will take advantage of. Something I want to cover, okay? So in my boot camp yesterday, we went over the narrative trade and we reflected on things like, for a narrative trade, the idea is basically, think of the gold rush. Everyone went out there and wanted to mine for gold, right? But Levi Strauss, or the guys who sold pants and shovels, really made the most money and are still around to this day. That's the point, right? Is what's under the hood? Who really benefits the most from these narratives? Another example would be AI. Everybody knows NVIDIA, but most people missed it, right? The real move, the multi-100% move, or I think it's even a multi-1000% move from lows. But most people missed NVIDIA, right? But there was still all of the AI infrastructure that we've been trading now for over a year, okay? So that is the narrative play. Another quick example would be the US wanting to be more self-reliant on precious metals, so they began drafting executive orders, signing executive orders, and moving money around, okay, so that we become more self-reliant. And you can look at companies like MP for an example of what that looks like, and then even look broader to the sector, okay, and see the strength that has come into that sector. Last one, got to give you this one, is the rate-friendly environment that we are about to go into, and something like home builders, okay, or real estate would be the same example. But if you look at Nail here, look at this positioning, okay? They can't hide that from us. They've been positioning into this narrative for quite a while now, and I've been playing it since we've gotten over the 200. Only once, but I am looking to play it again coming out of the Fed decision. The 6 to 18 months after the end of the rate cut cycle are historically very strong, and for all the people calling top, yeah, I think we're gonna get a pullback. I think we might even get a slight correction, okay, but in a year, history shows the last 20 times that they have cut within 2% of all-time highs, which is going to happen tomorrow, 20 out of 20 times we have been higher a year later. And then also 3 months, 6 months, and a year later, all three on average were higher, but 20 out of 20 we've been higher a year later. So look, I don't want to hear bubble talk, okay? It's just the data doesn't support it. Plus we've got double-digit Q2 earnings growth, we've got expanding GDP, we've got lowering cost of living, lowering inflation, right? I don't want to hear bear talk right now. It's not in the charts, right? Read the room, okay? So guys, a narrative play that I'm considering to start to look into, and I'm just doing this because I'm not going to give you guys any triple R's today, right? We're waiting, okay? They've all triggered, right? They've been triggering for the last few weeks, right? The triple R play, pump the brakes, all right? We got to wait, let things pull back. So it's a retracement reaction. We haven't even gotten the retracement right now, right? They're all popping off. We're taking profits on some of the ones that we got into last week. The trade has happened for the current triple R setups. We need the retracement. We're looking for the reaction, okay? And then the remount, triple R, the remount is where we're gonna make some more money, all right? Get up over 200% on the year. But the narrative that I'm looking at here that has come to my attention, this is a ticker, right? I like to more look to the sector for strength, which I'm gonna get to that here in just a second. But this is a robotics company, and look at all this accumulation. All right, you can see some accumulation on the chart, and we've got some structure here. So those are the things that I look for. I look for a story, structure, and accumulation. We're getting that here on this robotics company, but if you want to step out, and what I will be doing, I'm not going to just blindly jump into that. Let me finish the thought here of how I will play this, okay? Because I'm probably going to take this trade, but there's some things that we'll go into here in just a second that I need to see before I take it. But we've got our structure here outlined on the yellow lines. All right, and we're ripping. So again, on this as well, we're extended. I don't get FOMO anymore. I'm not gonna chase. If this breaks out here, that's fine. It'll pull back. And that's what I want. I want it to pull back, show me strength at or around that level, and then push higher, and I would buy that show of strength, okay? Just like the triple R setup, buy my show of strength around key levels, okay? So that's one scenario I see going, right? If it goes without us, it's fine. We'll wait for a pullback, grab the show of strength as it pushes higher, looks to push higher. And the other scenario is we come back down and test the bottom of the uptrend here. So if we get something like that, then I would look to get like partials down here, all right? And then maybe start to size in then as we come back up and look to test the top of the range and possibly break out, right? So that's how I'm going to play this one very likely, but what I'm gonna look for is a bit more of a sign out of bots, okay? I want more out of this. I don't see the accumulation coming into the Robotics ETF just yet, and we're testing a pretty major level here that we could double top at, right, and pull back again. Again though, but same thing, if it breaks through, then we'll look for a retest, and then I want some increased volume. I want to see more accumulation in the broader sector, right? So that will really kind of solidify my thesis there in that smaller robotics company that is in this ETF. But that's what I'm looking for, guys. So it would be the same thing as the home builders, right? Seeing all that volume come in and then beginning to pick attractive setups within the names that make up that ETF. It's the same thing for robotics, guys. It's very likely my next narrative play. I think robotics hasn't even begun, right? But I think it's going to be a major industry over the next decade, right? And usually you see positioning far beyond where it becomes the mainstream talk, right? So anyways, if we get some signs of positioning in robotics, then I'm very likely to take RR as my narrative play in that sector. I may take a more stable company as well, Tesla, something like that. But anyways, this is quite the speculative one, right? They're pretty much pre-rev. They've got a little bit of revenue, right? They're doing a couple million, okay? But this is basically pre-rev to me, so this is quite speculative. But you can't deny this positioning that we are seeing coming into it, this accumulation, right? I may do like a so 1 unit. I like to break my portfolio into 10 units. And if I am going to allocate a unit to a robotics narrative play, I might break that into 2 positions, right? So like 50% of that unit would go into something like this, RR, and then the other 50% would go into a more stable name in the space, okay? Somebody more established and got more revenue on the books. It's what we're looking for, right? This is gonna be quite volatile, but I do see some upside here, and again, that accumulation is noticeable. So look, guys, that's what we're doing. We're just kind of looking for ideas, and we're gonna let the market stabilize a little bit. We are extended. Okay, I don't chase anymore. Not interested. Hey traders, if you're struggling to find consistent profitability, then you need a coach or a mentor. The markets are just far too brutal of a teacher. I'm up over 170% on the year and on track to do well over 200, so triple the portfolio this year, 2025. So if you want to stop spinning tires and you're looking for someone to lean over your shoulder and teach you a model that works, but more importantly than making money, I'm going to teach you how to keep it and compound it through proper risk management. I'd love to have you join me. I'm going to give you an edge you can leverage for the rest of your life. See you there.